Hello everybody, it's Michael here with your latest supply and demand market report. I hope you've all been well and trading well. Today I thought I'd do something slightly different to what we normally do. We will still be going through the charts as we always do, but I thought I'd shake it up a little bit and look at some of the cross pairs this time, as well as the other usual markets we'll look at. Hopefully the video won't be too long. I'm trying to keep it to maybe 20 to 30 minutes at the most, but we'll see how far we get. So we're going to go through it, and just so you know, as usual, this is purely for educational purposes. It's not a solicitation to do anything. You are responsible for your own money. So we're going to go through, and if you have any questions, if you were interested in the one-to-one program, or interested in the video course, the 7 videos where I go through the methodology that I prefer to use. Of course, there are several methodologies in the market, several ways to make money. The one we primarily use is supply and demand. There's a 7 video series that I've done a few years ago now, but nothing's changed in the methodology since then. So if you're interested in either the one-to-one course or the 7 video course, or even to join our Sunday evening meetings, the roundtable meetings, just contact me at storehouseanalytics@gmail.com and we'll talk about it. Okay. All that promo done, let's get to the charts. So we're going to start from the top of my list. You can see all the markets that I look at in here, and we'll see how far we get with these cross pairs. Let's start with the Aussie CAD as it's first on the list, and we're going to be looking at weekly charts and running through what we can see, the information we can get. So here we can see that the week has closed pretty indecisively. We are still working off of levels of demand above us and below us. So those are the 2 levels that are currently in play. You'll notice that prices are closer to the lower end than they are to the upper end. So if we are going to play with the information the market is currently giving us, we are still in this wide range. And it's wide enough for us to trade back and forth until the markets decide which direction they want to go in. Bear in mind, I don't know if you're all aware of this, but with currencies, trends do happen obviously, but they're not as frequent as in some other markets. As you'll notice here, for example, here was a trend going back from 2020 and finishing in 2021, and then was another trend to the downside, and now we're kind of flat. Oops, let me take out this magnet. So we're kind of flat now, up, back down again, and caught. So that's what we want to look at and see where we get to. For now, looking for buying opportunities on smaller time frames where we are now is not a bad idea. If we have pullbacks of smaller time frames, trying to buy to go up. This area, I know some of you will be looking at this, but this area would not qualify for us as supply. This long wicked area and the drop, because of a couple of reasons. Firstly, it didn't make it to a new low. Secondly, it wicked above this candle here. So usually you want a base that is contained within the candle before it, the trading period before it, and then it leaves. When it goes up like that and takes out stops above that high and then comes down, it suggests that the supply is at a higher level, not visible on this time frame but on a smaller time frame. So it's not the greatest of bases in terms of structure, and as I said, it didn't move far enough yet, so it's not something that we would be looking at necessarily on this time frame as an area that is going to cause a potential turn in price. And just as I say that could be the area that will take this thing all the way down to new lows. But we have rules. There's a reason we have rules. It's to give us consistency in the market. So I'm never worried about outcomes. It's always about processes. All right, enough talk on the Aussie CAD. Those are the levels we have. The Aussie Swiss, similar picture. Not the greatest of supply levels up in there. There isn't much in terms of demand. You're looking at that level, which is still holding below. All that is goobly gook, really. So looking at where we are, the fact that we've broken above these highs and struggling to stay in that area, it's suggesting to me that this one could go either way. We could have sellers. Well, I say that's any market, guys. It could always go either way, right? But for now, it's a nothing to do kind of market. I mean, if we go down to the daily, you could argue that the daily has hit into weekly supply and has since formed a downtrend, and you would not be wrong. So if you were trading for shorter term income, now notice it's a very different trade to the one I was just looking at on the weekly. This is if you were trading for more shorter term income, you would be looking for shorts in this area where we are right now. And you would then take that further down. I didn't intend to do this, but hey, why not? Take it down to the 4 hour and start looking at what price is doing. So clearly, if I did this, and this is multiple time frame analysis 101, I'm just going to take off this line. So if I did that to you and I asked you what's the trend in this market, you would not be wrong to say it's up, because you're only looking at this time frame. But remember where we started from. We started from a weekly trend, which was pretty much on the sideways side of things, and then we went to the daily. We saw that it was, even though on the weekly it was sideways, it was higher up into the sideways range. On the daily, it had formed lower highs and lower lows. It had taken out demand zones. Let me just take you back there. Look at the demand zone that the daily had taken out right here. Yeah, that was the demand zone that had held prices down. So now you have a series of lower highs, and you have higher lows sort of in there, kind of like that, or lower lows, I should say, not higher lows. Basically turning around and going down. So you wouldn't be wrong to try to look for shorts here. And then you go to the 4 hour, and now you see that the 4 hour is in an uptrend. Well, it's supposed to be in an uptrend. If it is going to rise into the supply, it's going to need to be in an uptrend. And that's the uptrend that you're seeing on there. Question is, do we have any evidence just yet of sellers beginning to come in? We do, but it's not something that we would necessarily immediately be jumping on to act upon. And this is what I mean. Notice we traded above that high. Right there. We traded above that high. Prices went to a new high. They found sellers and they've taken it. What have they done? Hark, hark. They've taken it to a new low. So it's a market that is now not decided. It can't keep up with the new highs, and it's going to new lows. It's caught in this range that I've just drawn. It's not closed above that range. It's not closed below it. It could continue in that fashion and then go up. You do have demand in this area. It could go down into that area and then rally. But when you look left, you have something very interesting. It's not something, as I said in previous videos, that I advocate you do often, but it is definitely a possibility within a methodology. You have two levels, one on top of each other. Within the bigger daily level, you have these two 4 hour levels right in there. Okay, so 4 hour uptrend. The only thing that can stop a 4 hour uptrend is a daily supply zone. We are in it. Do we have evidence of sellers coming in yet? Not quite. Can we trade short at these levels? Yes. Is it aggressive? Yes. Can it work? Yes. Is it high probability? No. Why not? Because you are trading against the trend on this time frame. You're trading against the prevailing trend on this 4-hour chart. So you want to wait for sellers to start to take control, meaning that this shorter time frame, this 4-hour chart, is beginning to realign with the bigger picture chart, the daily, by starting to turn into a downtrend. We don't have enough evidence to support that yet. We have some evidence of this trend stalling, but not turning. They're very different things. Trends tend to stop before they turn. Okay, so that was an in-depth analysis on the Aussie Swiss I didn't intend to do, but you never know with these videos. All right, I'm going to move on now. Let's go back to our weekly charts. Take all of these off. Remove drawings. Okay, let's go to the Aussie yen, and then we'll do some other pairs so we don't spend all the time on the Aussie. We have about 10 more minutes, I believe. Yeah. Okay, so we are looking at the Aussie yen, and clearly the Aussie has been quite weak, as you can see, compared to the others that were largely sideways. This has been a strong uptrend that started back in 2020. If we open it out now and we say, right, where are we going? Well, what's happened is, as usual in an uptrend, supply zones tend to cause reactions only to be broken eventually. So we have prices rally into supply, they pull back, they haven't quite made it into demand, and obviously it's obvious to see here this was the area of the previous levels that a lot of traders will be right to watch, the area that had the basing. Yeah, you see that? We call that the smiley face on the round table. It's just a thing you notice about markets when they're turning. And it's broken out above those highs. It's tried to pull back into that area. Didn't quite make it into the area we would have liked to buy, and it's gone back up now. So nothing quite yet to do. It would be brave to try to go short because you are in supply on the weekly time frame. You have reacted off of it, but the weekly trend in itself is still up. So trying to short here is possible. It's not high probability though, because you'd be going against the prevailing trend. If you're shorting this now, you are looking for what we would term a counter trend move, a reactive move, which is by definition usually shorter. Now, what scenario could this be different? What if, and these are the scenarios I want you to think about when you are doing your own analysis in your own cave. What if this turns out to be the area of the high? We've had our uptrend. What if this is where it ends, and you start to have the market doing this and going down? You turn that uptrend, you start breaking down, you start making lower highs and lower lows. The momentum shifts. You will, if you're short, you will then be well advised to use that area as a potential profit target. So you initiating this short here, you're early in the short. A lot of us want that. We want to feel like we've caught the top, and it can happen. It just doesn't happen enough for one to make a trading career out of it, but it can happen. I mean, I could make the argument this market has run up quite a lot, and it's time for it to come down. I could, convince myself of that, but I have to go with what I can see. All I can see right now is a market that is in an uptrend. Anybody that's been shorting this market and trying to hold on has been blown out. Short-term trades in it have worked. Even here, this short here has worked. If you entered short, you got the counter trend move to the downside. If you didn't get out though, thinking you had caught the top, well, you're either stopped out now or close to being stopped out, or you're sweating buckets basically, because this market has moved strongly against that short position. So the short is a tougher trade. It's basically what I'm trying to say in my usual long-winded way. Okay. All right. I'm going to move on to the CAD pairs now. Again, CAD in an uptrend. Notice immediately the first thing that jumps out at you is the CAD. Unlike the Aussie yen, the CAD Swiss did come back to its area. It's in a very, very sloppy demand area right into here. It's not one that we would take, but it's reacting off of it because there are traders who are looking at this area and saying it bumped up against this once, twice, 3 times, 4 times, and then broke through it. It's come back hard, tested it, and they were willing buyers in there. Like I keep saying to you all, supply and demand is, it's everything, but it's not exactly the same way that everybody trades it, right? So you can see the highs from way back in 2019 as well were being noticed by the market. All those highs that prices bumped into, they were all being noticed. Now we're dealing with these highs up in here. Those are the areas that we're dealing with now. Those highs up in there. So it's a sloppy market. A lot of the Swiss pairs, apart from I think the Swiss yen, which maybe not as volatile. You can see the wickiness of this. It's got a lot of wicks on it. So all that says is, well, your stops are going to need to be a bit wider than usual. So for now, the move is happening to continue this trend after a breakout. It's more convincing that it's come and tested. You might want to go down to smaller time frames and start looking for demand zones. You'd be looking down into here, for example, if you wanted to buy that. It's not the biggest of moves, but it's taken out supply and you wanted to go up. So I would be looking in this area, say on a 15-minute demand zones, looking for new highs being formed, supply being taken out on the 15-minute time frame if and when prices return here. That's what I would be doing. Okay, CAD yen, wow, similar picture. It's just run, right? It's holding really sloppy demand zones, and it's moving strongly. Let's squeeze this out and look at where we've had. Look at those. You see the power of trend. I mean, I don't know that anybody would argue that was not a decent supply zone if you're a practitioner of the methodology, but all it did was give you a little bit of a reaction to the downside right there. That was that supply zone. Very nice tight base. This is what I say to new practitioners as well. Just be mindful that supply and demand zones are everywhere on the charts. You want to be mindful of the trend. You want to be mindful of the locations of the zones that you are trading in. And now we are looking at these levels above at the extreme. For a trader who's looking at this, if you're buying, you're looking at these areas as potential exit targets when you're getting longer demand, not necessarily that you're initiating shorts there. See, it's a slightly different way to look at it. You could be initiating shorts here and be taking counter trend moves, as you can see that the counter trend move works slightly there, but the bigger move, as always in an uptrend, what was the bigger move? The bigger move is the one that we're in right now. That was the bigger move. Okay. So I suppose it's a lesson day today. I did a lot more teaching than I thought I would do. I have done a lot more teaching. Let's look at one or two more charts. Let's look at the dollar before we go. Let's look at the dollar and see where we're at. So the dollar, we were talking about these levels. It's since cleared these levels already, and it's reacting down. Remember, on the monthly, we have, if I take you out to the monthly, we've been talking about this level. I think everybody and their mother is probably looking at this level. That's where we're going up to now. And on the monthly, the demand is there. It's not the strongest of levels, but it is around there. Yeah, and there's a little one there as well. So both of these combined, I suppose, make it a bit stronger. The moves away are not the biggest for each of the levels. So they wouldn't be ones that, for example, you'd want to go into a daily and do a set and forget. I wouldn't anyway. But they're price levels of interest, shall we say. So we're looking for potential pullbacks to buy. We're breaking out of a big range, as we know. Will it hold above this range? We've managed to hold the highs and not close above them, which is interesting. We've not managed to close above those highs. We've tested it, but we've been brought back down each time. So let's see if we can manage to close above, or are we going to pull back first? Either way, it's the issue now is the location of these two levels. A, the quality of those levels are not the greatest. B, the location. They're located all into all of this area, right? So better you have a close above. This I'm just saying, because the demand is not till way down here. You've had that one work already, and you've made it to new highs, which is why I suppose you would favor the long side a bit more, because you've made it to a new high. You've managed to get above that high. So you've made a higher low, higher high. Classical definition of an uptrend. So the only thing is you want I suppose confirmation is the wrong word, but you know what I mean. You want even more confidence that this market is going up, and I see the confidence in the size of this. It's run hard into this level. They've still not allowed it to go and close above. So that's a slight worry. If we start to come down, and we start coming down with force, these levels will be at risk, I would say. Okay, it might be that we end up sort of basing around here a little bit and then going again. It might be that is what will happen. We'll have to wait and see. Of course, this is a monthly chart. It will take time to play out. So let's look at the weekly. So on the weekly, we can see again quite a parabolic move. I don't know that anyone would argue this has been a parabolic move in the US dollar, right? So levels that we're looking at on the weekly, you can see those levels there. That's a really decent looking one. That one is one that is off of the weekly itself, and so is that one. So we're looking at two levels if you're trading for sort of weekly income type trades. Those two levels right there. Prices are pulling back to the first one. My slight issue is the run up. So this may need a bit of time to settle in. It's moved up really quick, really fast, and a lot of other countries are now either raising interest rates themselves or talking about raising interest rates to catch up with the US. So it's not, the dollar is not the only sort of game in town anymore as far as where to park your money for a bit of interest. It's not great, but it's getting better than it was. So those are the two levels when you're looking at weekly income that you'd be looking at. I'll put that one in as well. So yeah, so looking now this week, coming into next week, I should say, looking at this level and how the dollar firms up, and obviously that will have an impact on the euro, because the euro has also had its parabolic sort of move. We can put that one on the other side. So it's also had its sort of waterfall move to the downside, and it is also sitting now into weekly supply. Let's look at what's below us. So did we make it below that one? We did manage, unlike the dollar that made it above its supply. The euro didn't quite make it below its demand level down in there. I remember trading this back in 2017. I caught that low. It was a break below these lows, and I caught this pullback. It was obviously a counter trend move, but I did it because I felt this was a shakeout after basing for so many years. Shakeout, couldn't hold it below there, it moved up. I braved that and added to that, and that I think I got out around there as it was getting up into these highs. So now we are back down there in 2022, 5 years later. So that's where we are, and looking at that on, say, the 4 hours, see where we're at. Aha, there we go. So we've seen the 4 hour, the first move on the 4 hour. This is that whole weekly area. Now, I mean, again, I didn't intend to do this, but hey, we're here now. You're looking at prices making it to new lows, so up into here, decent. This demand, not cool. Not saying it won't work, it just doesn't meet our rules. That's all. Not cool. That demand there is not cool. So we're looking at potentially that little bitty spider up there, and if we start breaking below, then we might be making new supply zones. So the euro is definitely one to watch. Been in a stage 2 uptrend, now as flat as can be at weekly supply. So potential distribution, and if it fails, this thing could go up, and that will be the failure of that weekly uptrend. If it starts getting above 109.36, it could go a bit deeper in and then fall, but definitely not an area to be looking to go long. That's what I'm saying. It's an area to consider shorts, although it's at the bottom of after such a big move. You're not exactly buying it after, or so rather selling it after a big move. You've waited for, a 2-week, 3-week rally, and you're now looking to see, will the sellers come in again? And you're waiting for that evidence. Right now, you're churning. You want to break below these lows and create new supply that you can short against. If you wanted, you could try to get the short up into there as a potential. If you're a supply and demand trader, to try and get the high of that trading range that you're in. Let's see what's above us. Nothing much. The next obvious level is not until up there. Okay. Oh wow, we're 28 minutes in. I'm gonna have to call it quits, guys. I hope this has been helpful. It was really off the cuff. I didn't plan any of this. I just had the mic in front of me and I thought, let's talk. Okay, so that will be me done. Remember, if you had any questions about the 7-video course or the one-to-ones, which usually are required, one of them is required for access onto the roundtable usually, just get in touch with me at storehouseanalytics@gmail.com. And with that, I will wish you good trading, trade well, and trade safe. Speak soon, everybody. Take care.